Hi guys, my name is Malvika and we're back on Facebook Live to let you know more information on what's happening in the tax world. I have Sudhir Pai with me and today we'll be discussing about active passive income and losses and what it means to a layman.
So Malvika, we are back on Facebook Live. It has been almost 2 months, I think. We have not been on Facebook. We are busy with a lot of other things. So happy to be on Facebook Live, and we will do this every week on Fridays at 1 p.m. We change the time to Friday 1 p.m. so that when you're driving around or going out for lunch, you can use the time to look at this recording and the live update as well. So regarding active passive losses, it's become very important since 1986 when IRS actually enacted this. And the reason why IRS actually did it is because they didn't want any passive losses to be taken against as active income. When you say active income, it is like earned income.
Okay.
Income from W2 or income from employment business. They didn't want active income to be set off with passive losses. Now, let me give you an example. Rental is always considered to be passive, meaning because you don't put your time. It's basically because of that property that you buy and that generates rental income and it has expenses and you pay taxes on the net income.
Right.
Now, if you have a rental loss, you cannot deduct it from your active income.
Okay.
If you have a W2 of say $200,000 and you have a rental loss of $10,000, then you cannot set it off.
Mm-hmm.
But there is an exception for less than $150,000, up to $25,000 can be set off.
Okay.
So if somebody making say 130K and they have a rental property or investment loss of 10K, they pay taxes only on 120K.
Okay.
But once the income exceeds $150,000 up to $250,000, there is a pro rata share.
Okay.
And beyond $250,000, you cannot adjust it.
Okay, that makes sense.
Now, also there is a concept of tax equity, meaning you enter into a business, into a partnership, or into a joint venture to get the benefit of a passive loss. Okay. Let me give you an example. If somebody enters into a solar business, now I am not a solar operator, but I want to enter into the solar business to take advantage of the benefits that are out there, such as the solar credit and the losses from the solar business, because initially there's a lot of expenses,
Right.
and there isn't enough income, so there is a loss. And the tax credit is because IRS gives a 30% investment tax credit, solar tax credit, right? So these things, when you enter into a business, you can get it. But to get the real loss and the credit, you need to be actively involved, meaning there has to be material participation. When you say active, it is participation in terms of hours. So it has to be between 500 and 100 to 500 hours of involvement of time.
Is there a year or a month?
During the year.
Okay.
Yeah, during the year. So if you spend at least 100 hours, you can showcase that you are active. In case it is towards 500, it is material and active both. So it has to be regular, continuous and substantial. That is how IRS defines it. Now what I have seen is that few of my clients come to me and they bring a K1, which is actually a loss or an income flowing from the partnership, and they try to take a deduction for that net operating loss coming from the solar business or any other business, and they want to take the benefit of it. Now when I tell them that this is passive, you cannot really take it, they get upset.
Right.
So it is my request to whoever is entering into such kind of a partnership or a tax plan or a tax strategy to be careful, because this active passive loss can really become a big deal.
Right.
And they may not be getting the benefit of that loss or the tax credit, and that can generate a big big audit for them, and they may end up paying penalties and interest on the amended tax return which they may have to file, because that's not allowed. Second thing is is about at-risk principle, meaning the money that is invested should be at risk.
Correct.
Only if it is at risk and if it is active can you take it against other income, otherwise you cannot. Another third point to be kept in mind, if say the K1 has a check mark of active, even though it is passive, then you are calling on liability, because an active member or an active investor in a business always can get hit with liability arising out of that business. So one has to be very careful about the liability, active, passive, the proper check mark on the K1, and doing the tax returns right. I've also seen some clients, filing their K1s are right with passive check,
Right.
but they want the return to be filed with an active check.
Active check. Okay.
So all these are taboos, and I think it's a big problem if they do such mistakes on the tax return. So while there are benefits of getting into solar business, but doing something like this is incorrect.
Okay.
And this is not only for solar but also for any business. The only exception to this is oil and gas.
Okay.
Now, if you are in an oil and gas business, IRS clearly says in its code that you can take a deduction for the depreciation and the costs, the losses from your other income.
Mm-hmm.
So there is an exception clearly written,
Okay.
whereas there is no exception for anything else.
Okay.
So any other business that you get into, say you buy a piece of land and there is a loss from that, it's a passive loss.
Correct.
You can adjust passive loss and passive income together. Say you have a passive income and passive, you can set it off and pay tax on it. So that is all about active and passive losses for today's Facebook.
So continuing from the solar credits that you were talking about, so I heard a couple of my friends take solar credits as a deduction. Is that something the IRS allows, or is there any checkpoints that you need to check before you?
Yeah, so the IRS does allow it, but the only challenge is if it is not active, and if you are a W2 recipient,
right.
and if you try to set the two off, it's
Okay.
going to be an audit risk.
Okay.
Because all those passive losses and can be carried forward, and the investment tax credit that a solar business can give has to be only for active, not for.
No.
So we have checked with 2-3 legal firms, tax attorneys, and they were very clear that you have to be very careful with this tax equity. You cannot just do it for anybody and everybody. There has to be involvement of time, or there has to be a passive loss. So this strategy works very well for those who have passive losses, or those who are really involved in a business, solar business, right? Or any other business. There is filming business. There are the other businesses where people get in and they really don't medically participate, but still try to take the
credits. That makes sense. And then I'm really happy that I heard that MyTaxFiler is hitting the 10-year milestone. Firstly, congratulations on that. How do you feel? Are you excited?
I feel very good. I feel very good. At the same time energized to focus on the next 10 years. We will be completing 10 years on October 29th. So gives us good feeling. We have been part of Inc. 5000 for 4 years continuously. Opened up 16 locations totally. We have multiple offices in India as well. We focus on US-India corridor. We do books and taxes, CFO surveys, audits, assurances, everything. So it makes me feel good. And all our 200 plus employees are very happy that there are bonuses getting declared and all that. So it's good feeling, and I think we will be doing well in the next 10 years.
Pretty good. Yeah. That's very nice to hear, and then congratulations again for that.
Yeah.
And then correct me if I'm wrong. Have I heard this right? That you opened a new radio caravana in both Dallas and Houston?
So I am involved.
Okay.
I have not opened it. There are passionate people who have started it.
Okay.
I have supported them certainly. It's called Radio Caravan, and it's there online right now, www.radiocaravan.com. It's being run by a group of very passionate people. Ravi Cherkuri is the chairman.
Oh.
He used to run Jasba. Now it's all re-christianed as Radio Caravan. And Shabnam Motgil, she actually is the CEO of this business. And we have been joined by about almost 20 RJs from the industry. So we are all excited. We are looking forward to getting this whole thing started from November 1, or maybe whenever we plan to start with the studios and all up. Dallas needs a second radio. It's been long due, and Houston certainly, because we are doing it for the entire Texas. So the idea is to get multiple radio channels. It's a six-pack radio, a combination of AM, FM, and HD2, HD3. So there is high definition radio also. So as we buy newer cars, it has got high definition frequencies.
Right.
So overall, I think it's a good news for the Dallas market, and under the leadership of Shabnam and Ravi and others, I'm sure it will do very well.
Well, I can't wait to hear the new Radio Caravana, and you guys should go check it out on the website too.
Yeah.
Once again, thank you, Sudhir, for joining us today, and then don't forget to watch us live every Friday at 1 p.m.
Yeah, so we'll be doing a lot of seminars as well,
Okay.
and I'm doing a seminar in New Jersey,
Okay.
San Diego, as well as in Fremont in California. So we are going all over the US and doing seminars on tax planning, and focusing on financial management, wealth management as well. So stay tuned, come back every Friday, look at our recordings. If you want to have a one-on-one with me or one of my teammates, just call us or write an email to tax@MyTaxFiler or Sudhir Pai at MyTaxFiler, and we'll meet you. Take care of your 2018, and make sure that you save every dollar and don't leave anything out there. And keep this in mind, we do clean planning and we make sure that you don't have any kind of risk open, and we do the right thing on your tax return. Thank you.
Thank you.
Thank you.